I'm looking at the invoice on the table. The purchase price, the asset is just the start. We factor in the freight and the installation before we side the capital for the daily run. Before we set aside the capital for the daily run. Before we side the capital for the daily run. Everything we spend today is the weight we carry at the beginning, the initial outlay. The initial outlay. Our goal is the maximization of wealth, searching for the value that remains. Take the present worth of every future gain. Subtract the outflow from the very start. That is the net present value of path, the positive, watching it grow. After the tax is taken from the profit, we bring back the depreciation we never really lost, because the cash is still breathing in our hands. Because the cash is still breathing in our hands. And when the project reaches the final year, we sell the scrap in final year. We sell the scrap and clear the floor. The working capital comes back home to us, returning home. Find the point where the scales are even, where the balance hits a perfect zero. That is the internal rate of our return. Or divide the gain by the initial cost to rank the choices by the ratio. The index of our success. Our goal is the maximization of wealth, searching for the value that remains. Take the present worth of every future gain. Subtract the outflow from the very start. That is the net present value of path, the positive, watching it grow. We are building more than numbers. We are navigating the fiscal terrain, deciding which way the future flows. Just keep the balance true.